Hello everyone and welcome back. My name is Greg Furman, a market analyst here at TraderPlanet.com, and these are the market positions for October the 4th, 2011. Now, our first position for tonight is going to be in the iShares Comex Gold Trust, the IAU ETF. Now, this is going to be another highly volatile week we've got ahead of ourselves, that's for sure. Now, what we're looking at this week is further problems in the Eurozone, the non-farm payrolls out of the US. We're looking to capitalize on a potential reversal in the gold trade. Gold's been under a considerable amount of pressure now for the better part of September, to be perfectly honest. This looks like it's starting to flatten out to me. We can see that the predicted TSI and the predicted MACD are in heavily oversold territory. We're starting to turn down near the bottom. Our predicted long-term difference and medium-term difference also heavily oversold. Again, they're turning up also. Now, our triple EMA cross, our key level here on this particular gold trust, 1669. We've closed at 1630. Now, what we're looking at for a signal here, number one, is the fact that we're grossly oversold. Number two, the fundamental is that if the U.S. non-farm payroll is coming out, the problems in the Eurozone, Greece, etc., gold starts to look attractive again. So we know that the number out of the U.S., the non-farm payroll, is not likely to be a good number, so it should boost the gold trade short term, if nothing else. So looking at this, our triple EMA cross is crossed to the downside. Our early warning signal here comes from our short-term crossover from Vantage Point. We can see that we're just crossing that trigger to the upside, and again, with all of these indicators in grossly oversold territory, it suggests that the momentum to the downside is going to at least pause here, and we're set for a retracement. Now, again, very risky trade, but what I like to see is that we're no longer breaking through that Vantage Point predicted low for the day. We're now tagging the upside. We've come up here. You can see we've broke through multiple times. We've crushed the completely smashed through the Vantage Point predicted low. When that triple EMA cross went off, gold plummeted. The iShares Comex Gold Trust plummeted with the gold futures. It's just basically, guys, it's the same trade. This is just far less volatile. This has only moved $2 a share. That's nothing compared to what gold has moved from 1900 down to 1500. That's a vicious move on gold. So here it's a little bit of a safer place to trade the long gold contracts. Now, what we can see, what we're looking for here now is to try and fine-tune this entry point for tomorrow. We're going to come into our daily report from Vantage Point. We can see our neural index is up. For tomorrow, we have 1616 as a high, 1594. Very tight range there for the iShares. So again, we're looking for a minor. Basically, you can pretty much buy this thing right off the open, right around the 16 area. And again, we're looking, or excuse me, the 1594 area. So we're looking for a minor pullback. 1616 is a very near-term target, to be clear. Now, if gold can get a bit of a push here, looking at this chart, I would look more towards the 1650, 1670 area for a potential target over the coming days, providing the current situation remains in place. So for tomorrow, 1594, minor pullback. Short-term traders, 1660, 1620. Medium to slightly longer-term traders that want to stretch it out to maybe Thursday, Friday, we should be looking at 1640, 1650. Now, that's our first position for tonight. Now, our second position is going to be back into the dollar-yen currency pair. We're going to continue to play this trade. We can see this massive support sitting down at this 76 level has been in place for 2-3 months now. We're at all-time yearly multi-decade lows. This pair is clearly getting ready for a bounce soon. It's just a question of whether there's going to be one more push to the downside. My opinion is it's unlikely that that's going to happen. It's possible, but I think that the yen, from a fundamental standpoint, buying yen simply doesn't make any kind of sense. They talk about Greece and the income, the debt to GDP being 153%. Well, the debt to GDP in Japan is over 200%. So by that rationale, the yen is clearly can lose favor very, very quickly. We're going to continue to play this trade. We can see our predicted MACD and our predicted TSI have crossed the trigger. We've had a huge sell-off in the S&P 500 today. When that sell-off takes place, what we can see normally is the yen would really make a big move to the downside. The dollar yen has really only moved about 60-70 pips today. It's been very, very well behaved. Now, I can't guarantee it's going to remain that way, but I think for now we're okay. We've closed at 76.65. Our key levels 76.76, 76.74, and 76.75. So you can see that essentially all of the Vantage Point predicted moving averages are all stacked on top of each other. We are going to have a break here very, very soon. My opinion is it's going to be likely to the upside. Looking at our short-term crossover, you can see that it's pushing back to the downside, but the medium and the long-term crossover are still pointing up. So other than this minor fundamental here that's going on in the market with the equity sell-off, the dollar is still strong, and in my opinion stronger than the yen, excuse me. So let's go in and have a look at this daily report and see what we've got for tomorrow. We have 76.10, 76.95. We've had 4 straight up days. Perfectly normal for this to retrace lower, and we're really still playing in that same range between 77.50 and 75.85. So risk to reward here, very good. We're going to have our stops likely down around the 75.50. That's where I would recommend putting them. If we get to 75.50, guys, we could get to 73. So there's no point in holding this trade. We're going to play this range. We're going to anticipate that the break will still be to the upside. We can see that our predicted short, medium, and long-term difference is very, very mixed here. So we're going to stay with the buy trade. We've been doing this trade for months. I've told this to my own clients. Very profitable trade. It's nothing pretty, but it does pay the bills. So we're going to continue to play this. 76.15 is what we're going to use for an entry. Target for tomorrow, 76.95 for your intraday trade. So a good move. We're looking for about 80 pips. So with that said, these are the market positions for October the 4th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.